Hey everyone, today we're diving into a really fascinating puzzle in the world of fashion accessories. It's a market that on the surface looks like it's absolutely crushing it, but when you look just a little bit closer, you find a pretty serious problem hiding in plain sight. Let's get into it.
It's pretty much business 101, right? You sell more stuff, you make more money. But what if I told you that in the accessories world, a huge surge in sales was actually masking a really deep problem? We're going to find out what's really going on behind the numbers.
So, here's our game plan. First, we're going to unpack this weird paradox of growing sales but shrinking profits. Then, we'll go on a hunt for the culprits driving up all the costs. After that, we'll hear straight from industry leaders, and finally, we'll take a look at what the future might hold.
Okay, so our story really begins with a classic tale of two trends. Two sets of numbers that are moving in completely opposite directions. It's creating what we're calling the growth paradox.
If you were just looking at the headlines, everything would look fantastic. Revenue is up, products are flying off the shelves. It looks like a perfectly healthy, growing market. Just take a look at these numbers. If we use 2023 as our starting point, revenue just shot up by a whopping 22% in 2024, and then kept up that strong momentum with 16% growth in 2025. By all accounts, the market is booming.
But, revenue is only half the story. The real question isn't just about how much you're selling, it's about how much you're actually keeping. And when we look at the profit margin, the whole story just flips on its head.
And here it is. This is the twist. While revenue was soaring, look at what happened to the profit margins. They completely collapsed. They went from a pretty healthy 7.8% all the way down to just 1.3% in that same massive growth year. That's the paradox right there. More sales, way less profit.
So, that brings us to the big question. If all that money isn't ending up as profit, where is it going? It's time to follow the money and find the culprits that are eating away at the bottom line.
To figure this puzzle out, we have to look at the other side of the balance sheet, the expenses. Let's break down where every single dollar of that new revenue is actually going.
And wow, here's our answer. This chart breaks down the top costs for 2025, and one slice is just huge. It's completely dominant. You can barely even see the others. Direct labor, finance costs, they're all just tiny slivers compared to the big one, the cost of material consumed.
91%. Just let that number sink in for a second. For every single dollar a company makes selling an accessory, 91 cents goes right back out the door just to pay for the materials to make it. That leaves almost nothing left over for anything else, especially profit.
And this wasn't just a one-off problem. This timeline shows us that material costs have been consistently, painfully high. And look at that peak, 93% in 2024. That lines up perfectly with the year the profit margin hit rock bottom. This right here is our number one cost culprit.
Okay, so the data tells us what is happening. But let's get some human perspective to understand why it's happening. What are the leaders of these companies actually saying about all this pressure? This quote from Spent International confirms exactly what we just saw in the data. They say it flat out. The single biggest challenge for their entire industry is ever-increasing production costs. So this isn't just some abstract problem on a chart, it's their day-to-day reality. And Shine Fashions gets even more specific for us. They really pinpoint the source of these crazy material costs. It's the volatility in the prices of raw materials like cotton and synthetic yarn. When the price of your most basic ingredients is all over the place, it's almost impossible to manage your costs effectively.
But here's the thing. These companies aren't just sitting back and watching this happen. This quote shows they're actively fighting back. They're turning to things like technology and innovation to try and get more efficient. They're trying to turn these huge challenges into opportunities to get smarter.
So now that we understand the problem and we see how companies are trying to respond, let's look ahead. What does the future actually hold for the accessories category?
Well, the road ahead really has two sides to it. On one hand, you've got some very real threats, fierce competition, an unpredictable economy, and the constant risk of supply chain problems. But on the other hand, there are some major opportunities. Things like using technology, expanding to new export markets, and tapping into that growing consumer demand for sustainable products. All right, so let's boil this all down. What are the big takeaways here? First, and most importantly, revenue growth can be really deceiving. It doesn't automatically mean more profit. Second, for accessories, it's all about material costs. That's the biggest pressure point, period. Third, the industry is trying to fight back with tech and innovation. And finally, the future is really going to depend on who can best manage those crazy cost swings and outsmart the competition.
And that leaves us with one last big question. In a world where it costs 91 cents to make something you sell for $1, is technology going to be enough? Can this industry really innovate its way out of this paradox and find its way back to real, sustainable profits? Honestly, how companies answer that question is going to define who wins and who loses in the years ahead. Thanks for joining us.